Good morning, guys. Friday, last day of the market, and today looks like a possible volume day, right? We're gonna have a big move today, I think, and it could be to the downside or upside, right? It's Friday, a lot of options are expiring, and Maddie made a comment yesterday saying that the SPY is gonna go back all the way to 458, and you know what? Personally, I'm not bullish or bearish, right? I just want to see which way the move goes, and I want to play it accordingly, right? I got some of my levels that I'm watching, right, which will act as support, resistance, and will give me a better idea which way the move might happen, right? But for SPY, SPX today, yesterday things were looking a little bearish. Pre-market we're holding green. Maybe in the first 10 minutes we go all red, people will go bearish. After 1 hour we'll be green, people will turn bullish, so on and so on and so on. All right. One key thing that was for this week was directional swings, which we have been getting, right? You'll be bullish in the morning, everything's looking so fine, charts they look great, right? Then all of a sudden a downtrend happens, right? Big swings. It's just a matter of being on the right side, catching them, right? And if you're on the voice chat in the premium channel, we have some great traders. They nail that all day, right? Albie's pretty fast with them, right? He's good with the SPY nails. Boogie waits for SPX, is amazing. Yash nails Tesla, right? Bucky waits for good put plays. Taka, many of the art traders, who are in the voice chat. But today on SPX, I do want to give you guys one number, right? This is backed by data. This is not my number, guys. This is not my level. This is just a number that's backed up by some data. All right, SPX 45.35. All right, if we hold above it, rally to upside, possible, right? If we fail to hold, downside, and 4500 breaks and hold below, 4400 is possible. I'm not saying it's going to happen. 4440 I think is the number of first level, but 4400 could be possible. All right, if this breaks, all right, if 4000 to the downside breaks, all right. But 45.35, and this is on SPX, and if you follow ES, right, LB, I think he follows ES usually, is 45.27, all right. So SPX is 45.35, on ES is 45.27. I think some get confused, right? So if you're watching the futures, then it's 45.27. If you're watching the SPX index overall, it's 45.35, all right. And so for me, that will be the key level today. I'm gonna watch, and I think after 10:30, 11, once the time decay kicks in, you can, or in the morning, you can play some strangles on SPY, Qs, IWM, right, in which you can nail some profits once you get the one directional move, right? And then you can wait, and then after 2 o'clock, once more time decay hits, as long as we don't chop near the VWAP, after 2 o'clock, if we get the move, you can do more strangles to the upside or downside. Personally, I'm sticking to strangles. I humbly accept, I don't know what's going to happen day to day. I really don't know, right? If somebody tells you this is what's going to happen today, right, tell them to sell their house, go all in, I guess. But another important key in this market is position sizing. Position sizing matters the most. Ever since I've been in with MSL in the Discord, ever since I've been trading, right, in the last few years, there's only one thing I learned, which is the most important, is position sizing. If you guys focus on your position sizing, if you keep it consistent, it doesn't matter what market it is. You can be wrong 10 days in a row. You can be wrong for 1 month. But if your position sizing is right, you will stay in the market. Now, let's say, for example, if you have $1,000 account, right? I know some, $1,000 accounts. This account should never go to zero. Why should it go to zero, right? All you gotta do is stick to less than $1 options, one play at a time. One play at a time. But what happens is sometimes you read comments from others, you do this. Now you're already in a position. Now you have one position worth $100, and now you have $900 cash sitting. You get excited. Oh, it's okay. I got $900 cash. Did this position from 100, maybe trading at 150, but you're still in the position now from 900 cash. You get excited. You don't even realize you freaking putting $200 into another position, right? And then all of a sudden next red candle, it messes with your mind. You're sitting there happy what's happening. You don't even want to sell that position no more because you think, no, let it come to break even, I'll sell. Forget break even, and that just keeps going down. It screws you up mentally, and by then this position from 150 has come down to $40, and now all of a sudden your cash is 700, and now you're not going to do a $1 trade. You know what you're going to do? You're probably going to enter another $200, $300 trade, hoping for a double to come back to 1,000. Then you're going to give that up again. This is what happens. This is not the right way of trading a small account. This is not a right way of trading a small account. If you have $1,000, you stick to less than $1 options, one play at a time. You sit on this $900 cash until that position is played out. It's simple. Even if you see a great opportunity, sit back, put your hands like this, do something, right? But if you're going to keep jumping into positions more than one with a $1,000 account, you're not trading right. You might hit all those positions. They might go to 2,000, 3,000, but you know what? You will eventually give that money back to the market. It'll take it back maybe in a month, maybe after 4 months, maybe in 6 months. All right. So if you have a small account, position sizing is the key. Trust me on this. And that $1 option that you play, make sure it's a picky trade, have conviction in it, let it play out, and $1 options go to 5, 6, 10 many times. All right. And if that $1 option doubles, or maybe 150, 11, just wait, just sell and just wait for the next position now. Right. Wait for the next trade. The goal is to always have cash in your trading accounts. Always, you can build back. If you keep decreasing your cash every week, you're in a rush to make money, or you're just not understanding this component right here, right? Or maybe you get too excited, you hear something, somebody says, this is for sure that's going to happen. Nobody knows what's going to happen in this market. Put this in your head. Not a single person in this world knows what's going to happen today. All right, we can only look at some data, become smart, and try to figure out what's going to happen. And one great example is the Gamma report. All right, so if you're a small account, I hope this makes sense. This is very hard to do. It requires discipline, right? Because human emotions are like, everyone wants to spend money when they have money, right? So to protect it, it's a whole different skill set. Qs, tech. We have all these ugly candles since yesterday, right? But in a downtrend, these candles happen. Today we can even rip up and we can maybe hold here. Maybe we go below if more puts are bought. All right. But for now, 360 will act as strong support. We're under 360 right now, which is currently resistance. But if we hold above 368, it's going to be a strong support. One play that I can give you, as you know, our title is Lotto Friday. Our title is Lotto Friday. If one play that I can give you is Q. If we get 354, right, may attempt a bounce. If we hit 354, you can go in very small, right? Like very small. If you have a $1,000 account, I would not, maybe one option at 30 cents, and then it depends on your commission, whatever it may be, or just stay out. First of all, lottos are not for you, so don't even pay attention to this. If you have a small account, all right, you don't have to play lottos unless you make $500 and then you want to throw 50 in a lotto same day. That's a different story altogether. But Q 354 may attempt a bounce. The second level is 350. All right, 350 may attempt back to 355 plus. All right, 354 will be the first. If it fails, stop out, take the 5-10 cent loss, whatever it may be, right? Let it set up. This is number one, and then the second is 350. If Qs get 350 today, we may attempt going back to 355 plus and even all the way towards 360 plus. All right, I've seen this happen many times. This is one possibility that can happen. Right off the open, if 360 is held and we see a nice little uptrend, then 370 is possible on Qs. All right, 370, and this scenario goes for IWM. It goes for SPY as well. This, the similar levels. If you guys just draw them, right, you can figure that out. So if 360 is held on Qs, then we're likely going to hit 370 or towards a 200 EMA. Then it's going to be a nice little green candle to the upside, which is possible. All right, if we get downside, 354 is the first, and if 354 fails, then 350. And if 350 fails and it doesn't hold, then the market is likely going to crater. Then SPX will probably be at 4400, 4450, and whatnot, right? And to watch all this, to play all this, all you have to do is just watch this right here on SPX 4535. SPX 4535 is the trigger level. If we hold above it, upside. If we get there and we even hold underneath it, then it's downside in play. All right, so that's that for you guys for the indexes. And what's next? Under Armour's announced some earnings today, and they beat their earnings. But the only thing they said in the coming quarter, they will be hurt by their margins. Their margins will be lower. Why? Because of the supply chain issues, right? So that's not good, and it's trading below pre-market lows. But Under Armour, I'm just eyeing it for long term. If the market does get weak, the reason I'm gonna play equity on this name is it's treated us well in the past. Probably gonna try catching it around 11-12 bucks if we get it in the coming month. Does it get there? I have no idea. I'm asking for like a 30-40. And then we have this Zen stock also had some big numbers yesterday. Had a nice little spike, right? I'll send you guys a website on CNBC so you guys can read in details. Nice buy, good volume, but does it hold in this market? I have no idea. I don't follow this company personally, right? But on Twitter, many were talking about it. I was looking at it and I'm like, wow. So it did make a nice little big bounce. And the only thing I can see here is this rectangle channel. If we draw it from here to, there we go, perfect, right? So right now it is at the trend line resistance. If we hold above this, it can go higher, but I think it's the 200 MA also. Personally, maybe it's a puts play for me if I was to play. But playing these spikes, once the move has happened, when the move has gone from 100 to 120, this is profit taking area, right? Many times people they always want rallies, but this is not the market where we're going to get those rallies unless it's backed up by some facts, right? So this stock, if it continues holding above 115, 117, you can see a nice little pop above it. 120 will be the critical level. If we hold above it, we can probably see 125, 130. All right, but here there's a good chance that they might sell this off. All right, Netflix, been eyeing it for a while now, and the stock is just setting up for a perfect strangle play, a very good strangle play. All right, it's been sideways for a while now. It's been sideways for about a while, and maybe today at the end of the day, I might take some strangles in Netflix 2-3 weeks out, because I think a $50 move is due one way or the other. Right, one way or the other. What do I mean by this? If I look at if I compare this with, let's go on MSTR, they have nothing to do with each other, but just something I'm going to compare this. So Netflix is something like this right now, right on technically, this sideways action. And as soon as you see on MSTR, we were talking about strangles, me and Yash, right? And I wanted to get them, but I just never. I actually put the order in, just never got the fill. But if MSTR strangles, you played it here in this base, a $50 move to the downside or up, those strangles went up by 200, 300%, right? You don't have to guess which side. You just wait until it settles, and it's going to make a big move, right? One of the strangles that we're in right now is a CRM, right? And you guys can see why. Why am I in CRM, right? I'm just looking for a $7 to $8 directional move in the next 2 to 3 days. Maybe we get it today, maybe tomorrow. As soon as we break out of this, it's going to break out eventually. It's not just going to stay here. Once I get the move, maybe towards 230, 236, or maybe towards 208, 210. I have no idea which way it goes. Hence, I bought strangles, right? Some are in calls, so I hope it goes to the upside, right? And I'll take off my money on the strangles. Right? Strangles are really safe, guys, in this market. If you want to grow your accounts, if you have a small account, pay attention to strangles. The only thing is when to do them, and you have to figure out the option pricing if it's worth doing them, right? And then we have Lucid. Somebody asked, Papa Gnush, I believe. Yes, this actually looks like a great strangle play. Yep. Is sort of a bearish flag on the daily, right? And it's just trying to hold, and I think it's due for a big move. Yeah, I would go maybe 3 to 4 weeks out, maybe 33, 34 calls and 22, 23 puts. The order to do strangles on this name, you have to make sure that the option pricing is right, and you'll get your move, right? You don't want to buy expensive strangles on a $27, $28 stock. Options have to be reasonable, but Lucid options, they're crazy. I can tell you right now, they're going to be priced high, so it's very tricky to play these strangles. You have to calculate the option pricing up and down move before they happen, before you buy them, right? So you can actually lose on strangles sometimes, and if it gives you a one-sided move, your calls might go up by huge, but the puts might even lose more value, or puts might go up by huge and calls will lose a lot of value, right? So a big move is required for these strangles usually, and then that's the reason the options are expensive, because of all this volatility. All right, and VIX, I'll go over it quickly, and our lows, and now we just see VIX. If VIX gets 25 today, guys, and we hold above 25, then the market is likely going to go lower. All right, 25 will be the key, and if we hold below yesterday's low, and then SPX holds above 45.35, so you can compare charts, then we probably have some upside. Today's Friday, a lot of options will go up by a lot, downside or upside, I have no idea. All right, Amazon yesterday held well. I was watching it. It did not give any big move to the downside. ICE is holding here, and let's see if it can continue holding above 3150, and it can get through 3200, 3250, and then we see, right? I think it's gonna get through 50, maybe test the 200-day DMA, and then let's see what happens. If the market is weak, then obviously Amazon's gonna dump along with it. We have some gap fills to do to the downside. Google, like I really want Google to come down to 2400, 2300. If it does it get there? I have no idea. But if it does, that'll be great. That's when I want to load up some leaps for the split. Okay? Because before the split, I do believe Google sees 3200, 3400 maybe, or even 3500 plus, right? It's going to be a fast, big move, and I just want to be in for that rally, right? And Disney, let's see what I did. Nope, gave up gains, was not able to hold as we went over pre-market. And now we see if it comes down to fill the gap slowly, and then we see how the market sets up to play this to the upside, right? It's creating a strong base here, but again, just gotta wait and see what the market gives us, right? Once again, guys, the only thing I can